Today we're going to be talking about SoFi Technologies and their upcoming Q2 earnings. We will not only go over analyst expectations for this upcoming announcement, but we'll also take a look at the company's guidance for Q2. And finally, we will discuss some key metrics around the business that I think investors in SoFi really need to pay attention to in this upcoming announcement. So if you enjoy the video, drop a like down below, and if you want to see more videos like this one, make sure to subscribe. Before we jump into all of the numbers, I wanted to highlight a few things with SoFi's stock price. The first is that it is down 23% year to date. At first glance, this looks really bad. However, if you look over the last year, we could see that at the end of December and early January, there was a large spike up in the stock price that lasted a couple of weeks. This caused the stock to trade at almost $10 per share. So really, this brief spike up has led to that decline of 23% because it's being compared against a number of $10. However, over the course of the last 12 months, the stock has actually traded in a range of around $7 to $8. The second thing I want to highlight with this chart is a trend that we have seen a lot with SoFi. I've talked about this in previous videos running into earnings, and it's around the fact that for some reason, this stock always tends to run up going into their earnings announcement. We could see back on July 9th, the stock was trading around $6.38 per share. However, it's ran up around 16% in just the last few weeks, currently trading at $7.40. And this seems to be a very similar trend as to what happens with SoFi headed into earnings. Their last earnings announcement was on April 29th, and we can see that the stock ran up around 10% heading into these earnings. However, post earnings, it dipped back down around 14%. If we go to their earnings before that, that was on January 29th. We could see again that the stock ran up around 20% heading into earnings. However, post earnings, the stock fell around 17%. And the reason I highlight this trend is because it should influence some of your buying decisions. If you're looking to build out a position in SoFi, right now may not be the best time. We could see SoFi after earnings fall back down into the $6.50 to $7 range, and that may actually be a better time to buy than where the stock is currently trading at. In my opinion, eventually SoFi will break out of this trend. It's just right now there are a lot of traders in this company and not as many long-term investors. Ultimately, to get long-term investors, they need to prove out profitability and show that it can be sustained over the long term. And maybe this upcoming earnings will be one of the first steps in them getting there. And they're expected to announce these earnings on July 30th. Analysts have an EPS estimate of 1 cent of profitability, as well as revenue coming in at $566.69 million. On Yahoo Finance, there are 15 analysts covering SoFi, and they have an average EPS estimate of 0 cents, with a high estimate of 1 cent and a low estimate of 0 cents. This is a very tight range, and year over year, this is a significant increase from negative 6 cents. However, it's going to be important to see how SoFi actually comes in, because if they come in with a solid beat on this range, let's say 4 to 5 cents of positive EPS, I think that would initiate a massive move up in the stock price. I think if they come through with 2 cents, that's probably similar enough that it's not going to make a big move, but I think that 4 to 5 cent mark, that could really instigate a large move up in the stock price. In terms of revenue, Yahoo Finance analysts have an average estimate of $563.91 million. So a little bit lower than what we saw on Google, but still up year over year from $488.81 million. That's 15.4% growth year over year. So yes, $566 million is an increase year over year from $489 million in Q2 of 2023. However, investors may pay a lot more attention to the trend that we have seen over the last couple of quarters, which in Q4 of 2023, SoFi put up a revenue of $594 million. That declined down to $581 million in Q1 of 2024, and now we could potentially see that decline even further down to $566 million. The one positive thing with this is during their guidance for Q1 earnings, they actually provided an outlook for the second quarter of $555 to $565 million of revenue. So investors should have this priced in a little bit already, and if they come through with a nice beat on their revenue, this could actually send the stock up in a positive way. One thing thing that's important to keep in mind is as these companies tend to focus more on profitability, we often see their revenue growth slow down. And that seems to be the case here for SoFi as well, as they actually increased their GAAP EPS estimate for the full year to 8 to 9 cents from 7 to 8 cents. And SoFi's just more recently made this move to focus more on profitability. A few years ago, they were losing tons of money every quarter. Keep in mind this was 2021 when money was really cheap and people were looking for new startups to invest in all the time. However, more recently, money has become a lot more expensive with interest rates being so high. And a lot of these companies have been forced to focus more on getting to a profitable state. And SoFi has proven a little bit that they can get there. However, investors want to see them show that for a full year, they can put up positive EPS numbers. For me, what's a little bit more important than revenue growth is actually continuing to grow their member count. And in their most recent quarter, they announced that they are now at 8.1 million members. That is up 44% year over year. And they've actually been able to sustain these mid 40-digit numbers over the last 5 quarters. And that is very, very impressive. I was actually expecting this to slow down into the 30 to 35% range, especially over the course of this year. And as we've seen interest rates increase in a massive way, I thought a lot less people would be looking to use something like SoFi because typically they've been seen as a platform for refinancing student loans as well as home loans. And those over the course of the last year have died off significantly. However, SoFi has pivoted really well into a lot of the banking industry with checking accounts and savings accounts. The other thing that's going to be very important to pay attention to if you're a SoFi investor is how they discuss lending products and where their lending segment is headed in the future. We have seen CEO Anthony Noto come out and have an interview about some of these metrics and how he believes that lending is going to be a massive part of their business in the future and a catalyst to growth here in the near term. And it's going to be interesting to see if those comments translate into their earnings and what their expectations are around interest rates. If we start seeing interest rates come down, SoFi should see a massive boost to their lending business, and this could propel their earnings, their revenue, every metric for the business up in a massive way. And the lending business could be the catalyst over the next 1 to 2 years that sends SoFi's stock price higher in a major way. Ultimately, due to the fact that it could have a massive impact on their EPS numbers. For 2024, analysts have an average EPS estimate of 9 cents with a low estimate of 8 cents. This is right in line with the company's guidance that they provided in Q1. However, there is a high estimate of positive 14 cents of EPS. I think a lot of this depends on if we start seeing rate cuts on the back half of this year. And 2025 numbers are very interesting as well because the average EPS estimate is over double the average EPS estimate from 2024, and that is 24 cents of positive EPS. The way I look at this number is we start seeing rate cuts and we see continued rate cuts throughout 2025. However, the low estimate is sitting at 12 cents. I believe this number is a lot more in line with what I would expect if we don't really see a whole lot of rate cuts. We maybe see one this year and then maybe one next year. For the high number of positive 36 cents of EPS, I think this is a lot more dependent on the Fed making continued rate cuts quarter after quarter that will ultimately have a huge effect on SoFi's lending business and affect their profitability. So it'll be interesting to see the types of numbers that SoFi puts up. But keep in mind, do not buy a company just because I talked about it here on YouTube. Full disclosure, I am a shareholder of SoFi. So never buy a company just because some random person on YouTube talks about it. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. With all that said, I hope you enjoyed the video. If you did, drop a like down below. And if you want to see more videos like this one, make sure to subscribe. And as always, guys, have a wonderful rest of your day. And for the joke of the day, we have a good one. What do you call a happy cowboy? Check the comments down below for the answer. Thanks for watching.